Well, let's get the views of the Chartered Institute of Banking of Nigeria. Their president joins us virtually now from Abuja. Let's hear what they've been discussing about this and perhaps what they hope to do. Professor Pius Olarinwaju, President, Chairman of Council, Chartered Institute of Bankers of Nigeria. Professor Olarinwaju, good afternoon and thank you for your time.
Thank you. Thank you for having me on this program for us to be able to contribute a meaningful quota to the discussion that is ongoing on this issue. But the irony of it is that the hat has already been passed. Like you rightly mentioned, 70%, of the windfall, is to be paid by banks and everything. But we believe that before the act is finally signed, it's still a bill because the president is yet to sign it. We believe that there is need for this advocacy, and that's exactly what we are doing. Because at the initial stage, we are being reliably informed that it was supposed to be 40%. In the course of discussion during the public hearing, it was moved to 50%. So we were shocked when we learned that at the end of the day, when the bill was passed by the House of Assembly, it was increased to 70%. There are consequences that is likely to follow, especially financial consequences that is likely to arise. Our question there is that we are not averse, we are not against the windfall being, taxed or levy, whatever language is being used. But our argument has been that, there must be fairness in what we are doing. Banks are not the only one that has gained from this windfall. Also, we are aware of the fact that CIBN gave a directive that banks should not use it as a means of declaring dividend for their investors. We believe that at this critical moment of the economy, we are in support of government in the sense that they need for money to be able to fund some of their projects, especially the social-related infrastructures. We all aware that there's infrastructural inadequacies in the country today. But however, there should be fairness. Fairness in the sense that to avoid double taxation, banks had already paid their normal tax. Now you want to levy on those windfall, let it be limited to windfall. But the act, so we are still studying it, we have discovered that they are even talking of totality of the foreign exchange transactions. If that should be implemented, it means that all foreign transactions, because basically banking transactions can be divided into two, domestic and international. And at the international level, it's not just about foreign exchange rate alone. We are aware that the margin of the foreign exchange market brought about, the windfall. And the windfall, if we are going to pay levy, let it be limited to the windfall and not the totality of foreign exchange transactions. Otherwise, it will have an effect, on the bank. And moreover, in addition to that, the fact still remains that at this critical moment, when banks are about, and there's a directive from CIBN for recapitalization. We believe most of this recapitalization we are talking about, we believe it's an opportunity for us to bring in foreign investors and foreign dollars to come into the economy, because the target of this government is that come 2030, our economy should be, $30 trillion. If we are going to do that, where do we get the dollars? Because most of the investors coming abroad, they are rational investors. They won't want to invest when there's no certainty, when the banks are in problem. And this might send the wrong signal. And that's why we are saying that even if there's going to be a levy, let the levy be reasonable. 50%, which was, or 40% that was initially advocated, we believe should be limited, but increasing it to 70% is going to have a lot of other consequences. Cost of operation will increase, and whether we like it or not, foreign direct investment will also be affected. So at the end of the day, we might be thinking we are solving a problem to create another monster of a problem within the ecosystem. And that's why as the umbrella body of the banking and finance industry, we deem it necessary to educate people about this, the implication of this. And we thank God that with the government listening to the advocacy of the people. And we are of the opinion that before the bill is eventually
Prof.
They can still...
All right, Prof. So I hear you. You don't mind, giving out some of those gains, at least for the betterment of the economy, but you are not comfortable with the increase in the level, which has now been moved to 70%. But help us to understand, because some conversations have had about this. Some people have said by the time all the calculation is done, you may not even be able to point to anything as the gains, as the FX gains. And then if, as I heard, this is supposed to be a one-off thing, I mean, how does that affect all these issues you brought up?
Exactly. That was the point I was trying to make before. That, look here, it should be limited to the windfall. Windfall is clear to everybody.
But how do you measure the windfall, Prof? How do you measure the windfall?
It's accounting procedure is there. It's already captured. It's already captured, within that accounting system. Because there was a directive, like I did mention, there was an initial directive by the CBN instructing the banks not to see it, not to even declare any part of it as dividend. And when that directive was given, there was an understanding that there is likely to be something coming, a policy coming in that direction. So it is set aside. It was not declared as dividend for people. So now what we are trying to say is that the new act, like I said, we still want to study it and make sure that we look it until it's signed. Because, like I said, there can still be some amendments here and there. That is covering all foreign exchange transactions. That is, if that is included in the act, then it will create a problem for the banks. And that's what we are trying to say. And ultimately, it will also, the same problem we are trying to solve might be extended to the customers. Because customers, it means that if you are even doing trade finance, international trade finance, the cost, banks cannot bear all those costs without passing it to the customer. And already, the inflation is very high. The rate of interest is very high. The economy is already panting, economically. And with all these policies, so that's why we need to measure our policy and make sure that those people who are directly infected are involved in this final decision. The idea of just increasing from 50 to 70 to be, we need to exercise caution. And that is exactly the issue we are raising here. Because it's going to have a multiplier effect on the ecosystem as a whole.
Perhaps if you help us understand some of those multiplier effects, especially as it would affect the customers.
Operational costs will increase. That is a fact. It's another that economic negative. It will have negative impact on the economic growth because all other things, the rate of inflation and everything will also be affected. The way these things are connected. It will affect the growth itself we are talking about. And at the end of the day, we might be back to square one. And that is why there is need for cautious optimism in what we are doing in the policy, so that it should be a gradual process. And like I said, it should not be something that should be extended to all foreign transactions. We do not subscribe to that. It will create further problem, within the system.
So are you in conversation with the regulator, the lawmakers, to push this perspective of yours?
Yes, presently I'm in Abuja. We have been reaching out to some people, but one of the mistakes that was made was that during the public hearing, because the essence of the public hearing is to give all the stakeholders the opportunity of being able to hear their view. But unfortunately, the way this thing was hurriedly done, the very first day we were there, we were able to submit a paper before we moved from Lagos. When we heard about it, we sent the representative, we were able to deliver, our own position, which I don't think whether it was considered because we were not there physically. The next day, we were saying that, the committee is meeting to harmonize the papers, and we were denied entrance. And before we realized that by the end of the day, the law is already in place. The Finance Act is already amended. And we will start hearing about the issue of 70% and the like. But nevertheless, like I said, we have a listening president who is very altruistic and who we believe that we look at all these discussions that is ongoing and be able to do that which is right for a sustainable economy. That's our goal as the umbrella body of this institute, of the banking and finance industry. So,
all right, Prof.
So that we are still reaching out to people. We are not folding our hands, and that's why we are educating people that it's not even based on the elementary principle of fairness. Is it the banks alone that has gained from Windfall? No. The answer is no. So this approach should also be extended. It's a well-considered opinion that it should also be extended to other people who have made gain within the system, so that it will be seen as being
like which
fair.
sector, Prof? Like which sector do you think it should be extended to?
I believe we are within this ecosystem. I don't want to be seen as mentioning a specific sector now, so that it won't create a problem. But the government knows, and the CBN knows, because this thing there are transactions. And if you look at what is happening under this new regime, they have been trying to track down some illegal transactions, some things like that, and you don't want to mention anybody's name, but the records are there.
All right, Prof.
That is
all right.
The banks.
All right, Professor Pius Olaniwaju, President and Chairman of Council, the Chartered Institute of Bankers of Nigeria. Thank you so much, and wish you the best in your deliberations.
Thank you. God bless you. Have a great day.
You too. All right, let's take a break. When we come back, we'll head to the market. It's Business Incorporated, Channels Television.